Ira Epstein of Linn Associates with your metals market wrap-up for this April Fool's Day. This is the 1st of April 2020, getting on to 6 p.m. Gold getting back up. Everything was down today, fairly hard to be honest, and you're getting bounces off of such a big break that we had in the marketplace. And what took place is the market on the first day of the month saw some allocations, reallocations probably. Stock market down about 1,000 points in the Dow, 970 something, big break there. You're getting something of a rally tonight as the government keeps talking through Steve Mnuchin that he's going to ask Congress to buy some crude oil. Trying to get, if you will, the government to put it back into our reserves. I don't know if that makes sense or not. The smartest thing might be getting the Texas Commission to do what we did back in the 70s and stop production in certain areas. We saw some oil companies today take it on the chin, going bankrupt. That doesn't mean they're out of business. It's a way to not pay their debt. So we'll see who picks it up. Remember, Sam Zell was in the woods about a month and a half ago looking to buy oil companies. I wonder if this isn't his forte right here. But in looking at the metals, the copper got hit. It almost gave up what it made the other day. And now the question is, what next in these markets? So let's take a look, if we could, at the charts. In the gold, you still have an upside bias since you're over the 18-day average of closes. Are we trending? Well, no. You can see you got a big swing up and down, and now you're just sort of in the middle of that at this point. When we take a look at a daily bar chart, the volatility is so big that it takes up the whole chart. I mean, it's a $2.50 move. The trend turned down. It backed down because you've got a pattern of lower highs on the swing line, and you can see these lows, lower lows. Now, I'll widen it up on this chart for you. All you did is pull back to the 18-day average, and you held it. What often do you hear me say here? The red line, the 18-day moving average of closes, is what I call a line in the sand. When a market gets over it, it's not uncommon to pull back to it. Under, not uncommon to stall back at it right through there. It's sort of that center line that the market looks for. I think it has to do with how many different algorithms basically are using some form of it, 18, 19, 20, 21 day, whatever they want on a moving average, and they're using it. They get so close, these numbers, that I don't think they matter that much when they're, whether it's an 18 to a 20-day average. But I like the 18, and I see that as the support. So at this point, while the trend is down on the swing line, the bias is up. You have nothing in the chart as I see it. Same thing here when I add the Bollinger Bands. They're out of play. You've got one up here at 1717, the other one way down here at 1450. Nah, I don't see anything that you would want to do there. When we come over to the slow stochastics, you are in the midst of correcting an overbought condition. We were overbought when we had this type of reading. Any reading over 70 right through here is overbought. The market then started correcting itself, and that's what it's been doing at this point. Now the question is, what's next? If the market decides to break from here, the next support after the 18-day average is the 100 at 1556. We'll see what they want to do. In the gold-silver ratio, you're pulling back to that 18-day average of closes. Now, the bias has been up ever since it's got over it and stayed over it. You had one little swing back down, and then it just went over it. This is another test of it right now. In the silver market, I see the trend is down. The market now has lower highs, lower lows with today's break low. Resistance right here. This is where I think the bears are defending their position. I do see some divergence on the chart. I see momentum is trying to go up, bias down, trend down. So what I think that the bears don't want to have happen is to get over 1450. Other than that, I think that they're defending their shorts against that 18-day average of closes. In the copper market, I don't see a trend. I see a market that has a lower low pattern, a higher high. The bias is down. Momentum is flat in the market right here. In the platinum market, it's sort of like silver. The market's got lower highs, lower lows, running against the resistance of the 18-day average of closes, while momentum is still pointing up. If momentum were to turn down in both, then I'd get more excited about the bear side, but I'm not here. It hasn't turned down just yet. I do think that the market, is at a decision point. In the palladium market, I look at the pattern of higher lows, higher highs. You're still in an uptrend, but you're very overbought. Overbought always scares me. In order to correct that, you have to get both the blue and the red number over 80. It's not even trying to do that. It's just playing an overbought market. So I think it's a bit rich in price then. In the dollar index, the battleground's the 18-day average of closes, that line in the sand. You can see it very clearly. Higher lows, higher highs. Momentum pointing down, and on the settlement, the bias is up. So the chart is what I'm going to call a mess right here. It has to resolve itself one way or the other, and it hasn't yet done so. What I did today is I recorded another one of my special reports, and I did it on stock indices. And folks, I will get probably next week to the metal markets. But what I did is all the Fibonacci counts for people. A lot of people like to see when you get a vertical decline like you had in stocks and you get a bounce, where does that put the market on this type of action? So I covered it in detail for you if you like the S&Ps, the Dow, the Russell, and the NASDAQ. And then I did the VIX cash to help out there too. Go to our website under the word research, click on, you'll see it as it drops down in the menu. Enjoy it. I'm Ira Epstein. You have a good trade day, and I'll see you all tomorrow.